Hey guys, Ivan is here, and today we're going to chat about the Toronto and the GTA real estate markets. Toronto Real Estate Board just released their numbers, and we're going to go over them in a little bit more detail and also talk about what it means for the buyers and for the sellers for the next little while. So over the past couple of years, like a broken record, I was talking about the same type of news, that the market was in the seller's market, and there was no good news for the buyers. Well, things are changing a little bit, things are shifting gears, and the market looks a little bit more favorable to the buyer. According to the numbers published by the Toronto Real Estate Board, it seems like the market has entered a balanced territory, which is great news for the buyers who were putting up with the conditions, brutal conditions in the market for the past few months. But I feel that it's important to make this distinction here right now, and to say that the balanced market doesn't mean that the prices are going to go down. The market is not crashing. The buyers are still here. They didn't leave the country. They did not run out of money. They are most likely just sitting back and waiting to see what's going to happen in the current market and the current market conditions. So the price trajectory will still most likely will be increasing for the for the rest of the year, although it will probably going to be a little bit slower. So with the extremely hot and competitive market conditions, the government felt the need to step in and increase the interest rates. They did so in March. They hiked the interest rates by a quarter of a point, and they also said that there will be increasing interest rates throughout the year. So the next interest rate hike is expected to take place sometime in mid-April. The second major factor that contributed to the things cooling down a little bit in March was increased supply. All of a sudden we have a little bit more inventory on the market, more options for the buyers to choose from. There were 20% more listings on the market in March when compared to February. The third major factor that contributed to this cool-off was the foreign buyers tax. At first, the government said that they will increase the foreign buyers tax from 15% to 20%, and then they said that they will completely ban all the foreigners from buying properties in Ontario for the next 2 years. So let's take a look at what was happening in the market in March. And the first thing we're going to look at is how many new listings made it to the market. There were 20,038 new listings on the market in March, while only 10,955 sales took place, which brings us to sale to new listing ratio of 55%. So when we talk about a market being balanced in the balanced territory, it doesn't mean that the market has been slow. In fact, this was one of the busiest months of March in the history, and the sales jumped 20% from February, which is quite significant. Another interesting thing that took place on the market in March was that the prices on average actually dropped $35,000. This was a very unusual thing to happen in March, because March is the first month of the spring market, and usually it is a very busy time. The prices usually rally up for the next few months. However, we saw a drop of $35,000 on average, which is really good news for the buyers, and let's see if it holds up going forward. Personally, I'm very happy to actually have some good news for the buyers. It's been very rough couple of years for anybody who was in the market looking for a property to purchase, and it was a very, very intense market condition. So finally we have something to talk about, some reassurance for the buyers who are looking for a property to purchase right now. Anyway guys, thank you so much for watching this video. I hope it was helpful for you to form your own opinion about the market, but if you want to chat with me a little bit more about that, all my contact information is down below. Until next time, take care, bye-bye.